The housing market is crashing, like I told you last year. Consumer confidence in the housing market has dropped to its lowest level since 2011, according to the Fannie Mae Housing Survey. Only 17% of survey respondents thought it was a good time to buy a home. And that number is down 3 points from the 20% that said that it was a good time to buy a home back in June. The first number of people, the 17%, said that it was a good time to buy a home back in July. 67% of homeowners think it's a good time to list their home. That number is down from 76%. That number is also dropping. The number of people who think that home prices will drop continues to grow. 30% of homeowners think, of survey respondents think that home prices will drop, and that number is up 3 points. The Fannie Mae Housing Purchase Sentiment Index constitutes 6 key components: selling and buying conditions, mortgage rates, housing prices, job loss concerns, and household income. That number dropped 2 points, 62.8, and it is down 13 points from the number a year ago. That number was at an all-time high at 93.7 back in midsummer of 2019, before the pandemic. Mortgage rates that keep on increasing is the top reason why consumers think that it is not a good time to either buy or sell a home, according to Doug Duncan, Senior Vice President and Chief Economist over at Fannie Mae, who wrote the release that I am citing on this video. The 30-year fixed mortgage rate started the year at 3%. Then it crossed the 6% mark back in June briefly. Now it's in the mid 5% range. Only 6% of survey respondents think that mortgage rates will fall, while a whopping 67% think that mortgage rates will keep increasing. And if you take a look at the headlines and what's happening with inflation, of course, today's CPI report found that inflation has been easing a bit. It has not gone up. It's little change in the month of July. Here's the CPI right here. The gasoline index fell 7.7%. You've been seeing lower prices at the pump over the last 2 months. The all items index increased 8.5% before seasonal adjustment. The gasoline index fell 7.7% in July, and offset increases in the food and shelter indexes resulted in all items index being unchanged over the month. The energy index fell 4.6% over the month as the index for gasoline. Nonetheless, everything is still expensive. Everything. You spend like about $20, you'll go home with a box of mints if you hit the supermarket. So everything is expensive, and this report is finding, of course, what's been proven all along, because you know that the sales of new and existing homes have dropped sharply over the past few months because people are worried about the growing inflation and broader economic concerns. And that's where this report is coming to. The big losses in the stock market has killed the demand for higher end homes. So you see that there are more homes in the market, and it's kind of helping a little bit. Nonetheless, inventory is still well below historic norms, especially at the entry level. So let's just go ahead and take a look real quick at one of the hottest markets right by where I'm at in the country, hottest real estate markets. In fact, take a look. Look, $650,000 right here for this crib. But take a look at this note. Price cut of $35,000 right here. And these are nice homes. See, these are real nice homes right here. And they're still suffering from price cuts. Okay? Right here. This is what you could see. And they're still suffering from price cuts because it's taking too long. And what I told you, if it takes too long for you to sell something, then you got to lower the price. Right? There's more of it. Price cut, $34,000. And take a look. These are not bad homes. These are not shacks where they're plastic wrapping air fryers to keep them together so they can cook your fried chicken, right? All right. So, and not make it fried, so it's not as bad for you, quote. Price cut of $20,000, $630,000 right here for this crib right here. Look, price cut again. And if you keep scrolling down, we won't even take a look at those images real quick. 29 days on Zillow, price cut, $10,000 for that $615,000 home. So you're already seeing price cuts anywhere in the range of 5 to 10%. Just in this market. This market is hot right here, $49,100 right here. for this $900,000 home right here. Take a look. Price cuts, where these things used to have multiple offers over asking price. And now look, price cut here, and it's all over the map. If you go to the hottest markets in the country, anywhere in the country. Now, you know that if you take a look at the National Association of Realtors numbers, the pending home sales index, a forward-looking indicator of home sales based on contract signings, dipped 8.6% in 90 to 91 in June. Year-over-year transactions shrank 20%. An index of 100 is equal to the level of contract activity in 2001. Contract signings to buy a home will keep tumbling down as long as mortgage rates keep climbing, as has happened this year to date. And what's going to happen with mortgage rates? Before we get into that, Fed Governor Bowman, hopefully I'm pronouncing her name correctly, or his name, see similarly sized rate hikes ahead after 3 quarter-point moves. Fed Governor Michelle Bowman said she supports the central bank's recent 0.75% point rate increases and believes they should continue until inflation is subdued. My view is that similar size increases should be on the table until we see inflation declining in a consistent, meaningful, and lasting way. So it hasn't declined much. There's little change, as you can see right here. Look, consumer price index for all urban consumers was unchanged in July on a seasonally adjusted basis after rising. So they have to see inflation getting tamed significantly because it's the highest number in over 40 years. They're trying to get this down. They don't want to see the dollar get devalued. And the rest of the planet is not doing as well, right? So mortgage rates are going to keep increasing. It's going to increase the inventory numbers because remember, like I've told you time and time again on this channel, when there's more of something, it costs less. When there's less of something, it costs more. So as you can see, there's more homes hitting the market. Thus, it's going to cost less. That's why you're seeing all these price cuts right here, right? Take a look. Take a look at this number from the Census Bureau right here. In June, 590 homes, 590,000, excuse me, this isn't thousands, homes, new privately owned homes sold and for sale. Well, sold 590, right? For sale, 457. And this number just keeps on going up for sale. See, in January 2022 is 394, then 396, 411, 435, 447, 457, right? Even on a not seasonally adjusted basis, the number keeps going up. The amount of homes for sale, 390. So people are not picking these things up. And take a look at this other note that I found over here. The mortgage credit availability decreased in July according to the Mortgage Credit Availability Index. This index determines how hard it is for people to secure credit to purchase homes. The MCAI fell by 9% to 108.8 in July. A decline in the MCAI indicates that lending standards are tightening, while increases in the index are indicative of loosening credit. So that means it's harder for you to obtain credit in order to obtain a mortgage so you could purchase a home. And look at this, Sternlitz, Starwood looks to unload 3,000 homes for $1 billion. Sternlit is a Wall Street company. This, if you've been following this stuff, and I suppose that you have, unless you're under a rock or somewhere, right? Somewhere out in Tatooine, Wall Street, hedge funds, and all these organizations, large financial institutions have been buying up homes to go ahead and rent them. They've been going ahead and dumping money into it. But as they see that the prices are declining, that there's more inventory, people are not buying as many homes, they're starting to dump them, even at losses. They're trying to get rid of this stuff quickly because they're seeing that the prices are declining and it's not as good as an investment, at least for right now. See, that's the way they operate. Just like with all of these stocks, they dump them on a regular basis, they buy them on a regular basis. They're interchanging their holdings. And that's the same way that they're treating housing, basically. They want to dump all this stuff because they know it's not going to do well for their investors for the next few years. So you know what? It's probably a bad time if we just bought close to the peak. So they're dumping this stuff on a regular basis. So you got all these numbers showing you how the Federal Reserve, how the housing market is dropping, just like this one. Like I told you about inventory. You see this? Take a look at this yellow line right here. This yellow line indicates the inventory on Realtor.com. So this is the yellow line of inventory in 2022. Look how it was 400K right around here. As a matter of fact, I'm not showing you the entire graph so you can have a full understanding of this, let me go ahead and scroll it up a bit right here. January, February, March, April. See, right here, right here, this is where you got the housing peak. Right here, back in February, where you got housing prices at its top level. Then at March, inventory started going up. April, inventory started going up. Look from April to July by how much it spiked. Look, 747, 526 homes for sale right here. Look, and it keeps going up. If it keeps going up towards these levels, remember, the confidence in the housing market is down to the 2011 levels, up to these levels, then you're going to see a crash unlike anything you saw in 2008. So again, you come to this channel because you're looking for support. A number of you, particularly broke is a joke, right? You're always writing in the comments how you're feeling sick, how you have nothing going for you. But listen, for all the people who have been watching the channel since 2020, when I was dropping the series on grants for everyone and telling everyone, start your small business so you can have an asset that can back you up in the best of times and in the worst of times. You're doing so, but it's not solely to rely on grants. Grants is just one component that you could potentially use to fund your organization. The key component, the way that I built my business, is by selling my service, selling my services to large organizations. I was operating my business while I held a job driving traffic to magazines, because my job, I was actually outsourcing it to other people. I eventually got laid off, and then I didn't even have to come out my pockets because the profit that I got from that job was essentially like my client. Don't let anybody tell you that you can't have a job and operate a business at the same time. You can have a job doing whatever it is that you want to do and potentially get a vehicle and rent it out on Turo, or do whatever it is you want to do. You can do whatever. Listen, there's various ways. There's more than one way to skin a rat. And whatever way works for you, whatever way makes you happy, makes you fulfilled, profound, however it is that you have to live your life in order to be at peace, what operates for you, just go ahead and do it. Even my way doesn't have to be completely in that fashion. All right. They just want to tell you their way because their way is the way they're teaching you to sell you something. I'm not selling you anything at this juncture. I mean, honestly, I don't have to sell anything on YouTube. You see me lax with it because, of course, I put myself in a position where I've generated enough revenue to what? I build on what? The solid structure that I'm telling you time and time again. One of the key investments in which you want to make is yourself. And you always want to invest in yourself and education, more specifically in your credit. Because your credit, once you go ahead and have a credit base, you have like an added perimeter of security. Like if you watch all these narc movies on Escobar and all these drug traffickers out in Colombia and all these other countries, they always had different perimeters of security. It's a military. Military has the same way. They got different rings of security, right? So that's different rings of financial security. When you got your credit in check, you pay down your balances to under 10%. Anything that reports to the credit bureau. That's how I did it. I didn't do it through any hacking. I just paid down my balances, but I had to initially sell my products or services. I did not rely on a grant. I got a grant after the pandemic because, I mean, it was easy to do so, but I had my credit that streamlined the process for me to be able to be approved for those grants. But I came from zero. Remember, I came from nothing. I'm from Jamaica, Queens, New York, South Suicide, Queens, okay? And we came from absolutely nothing. Now, you want to get prepared for this stuff. Let's say you're on this because of the real estate or whatever. First off, fix your credit. Just take a look at some of the offers that I've recently got, because I have been preparing with that line, with that perimeter. Like, look, just take a look at some of the things for which I've been approved. This is a Truist account. These are the kind of things in which you can get involved once you set up your credit. I set up a business account with Truist. You maintain a balance of, I think, like $1,500. They give you like $200 back. That's the small part. This is $16,000 credit line that I got. Look, application is approved. You're approved for $100,000. This is to buy Apple products. Right now, I don't have an immediate use for them, so I haven't even used this right now. But look, $100,000 right here, right? Because you're doing everything right, because you're building your business credit. Look, congrats, Neal. Welcome to Chase Bank Inc. Business. This is a $16,000 line right here. Credit limit, $16,000 line right here. The Platinum card, right? Highly coveted right here. Approved through American Express. This thing is potentially unlimited amount of spending that you can enjoy on this thing. I mean, they typically start to pull your card around 20, 30K, but then you pay down a little bit and then they give you more, a bigger line to mess with. I've got this video that I showed you about raise your credit score 200 points in a month. So you want to learn how to do this kind of stuff. Look, there goes the credit score right here, how to get your stuff up. Right here, 767. Once you're above the 740 mark, you can get all kinds of funding to help you do whatever it is that you need to do to go ahead and build your business. And even if you don't have the best of credit, my brother, he made, using zero money down, he made $80,000 by selling a $1.2 million multifamily home, right? He sold it for $1.3 million, found an investor for it, found it, that he ran the numbers on it. He does all of these things, and I'm going to potentially have him on the channel if you guys think it's helpful, using zero money, zero down, and zero credit. Okay, he didn't use any credit for this particular deal. He sold it at 1.3, a 1.2. He got it for 1.2 million, sold it at 1.3, paid $20,000 in back taxes, and pocketed $80,000 for himself. So you want to learn how to do that stuff? Go ahead and hit me. Drop the comments in the chat session and go ahead and subscribe to our newsletter at bit.ly/Neal Rod. That is bit.ly/Neal, Neal Rod. Now get into more of the content so I can get your feedback and have an understanding as to what it is that you can do to go ahead and ensure that you thrive throughout this recession. Because throughout the pandemic, for instance, I dealt with people face to face on a regular basis, right? I had a number of clients for which I performed lead generation. Lead generation, just in case you don't know, I performed marketing for them, and I would get leads for them from the internet through search engine optimization and pay-per-click marketing, where you're paying for appearing on targeted keywords on the right people that match your target market's demographic on Facebook and other platforms. A number of them, they dropped their ad budgets. So I'm like, you know what? I've got to start dealing with these bigger organizations. That's what the great wealth transfer is really about. Taking money from all of these small businesses that were, quote, non-essential, and allowing other businesses to thrive. The essential businesses like Home Depot, like BJ's, all of these big companies, Google. So I partnered with Google, got on the grind with the channel, and thus I generate revenue through the channel. Through advertising, I became a partner, and a number of you who have been with me from the jump, I thank you for your support and continued viewership. You know, I help people secure millions of dollars in funding through the economic injury disaster loan, the Paycheck Protection Program loan, over $2.8 million to be exact, through the Paycheck Protection Program loan. Got like $30,000 in affiliate revenue due to that. So that's what it's about. That's what the Great Reset is about. And I'll drop a video if you think it's helpful on that, on the new way that you need to be operating your business. And you know how to operate your business. A number of you tell me you got these car washes, you've got businesses where you decorate, you've got businesses where you create shoes, and then you go ahead and adorn them, and you do that for people. You've got game making businesses, you got all kinds of businesses. Now, you have to learn how to adapt that business to the new way of life, the post-pandemic way of life. That's what the Great Reset is about. That's what the Great Wealth Transfer is about. And I'll drop a video to further expound on that, so you can be in the best position to thrive, regardless of whatever market conditions that we encounter.